All right, how's it going, everybody? So it's jobs day. Today it's job openings day. We get JOLTS numbers. If you're still learning all the different economic, different names, these different events, think of the JOLTS number as the take this job and shove it number. It's based on the idea of how easy is it right now for you to leave the job that you have and go find another job. When jobs are scarce and you really are worried that if you lose the job you have, you couldn't find another one comparable to it, you're probably willing to tolerate more and put up with more and hold on to that job a little bit more, just because you would be worried about finding another job somewhere else. But when the opposite is true, when companies are providing bonuses, hiring bonuses, sign-on bonuses, trying to get people in the door, and you really feel like you could leave your job and get another one relatively quickly, then that's what this number is keeping track of. So job openings, JOLTS. We are read around the world, most by Hong Kong, down more than 3%. Then the Russell here in the US down 0.5%, with Japan also down 0.5%, followed up by NASDAQ. The S&P down a little more than 1/4, with the Dow down about 1/4. If we look at what's on the table today, and we think, with the deluge of Fed speakers yesterday, really, there's so much to parse through. I'm not even done going through it all yet, but it seems like they're trying to lift that narrative that there could be one more rate hike this year. And we can kind of follow that up and see if the market is pricing that in or not. We've got the November FOMC meeting here. Our current rate is 5.25. The dominant projection is that they will hold rates at 5.25. We have a 75% chance of that at the moment. But we do kind of want to look down the road a little bit as well, right? And ask that question, what are they doing? Are they, increasing their probability that we're going to hold here, or are they unwinding that probability and pricing in a rate hike? So if we look down at the numbers here, we can see that compared to last week, they are pricing a little bit of a hike. But if we look between just yesterday and this morning, they're actually unwinding that a little bit. So a month ago, we had a 33% chance of a rate hike. A week ago, we had a 16% chance of a rate hike. Yesterday, we had a 27% chance. So you can see how they're fluctuating, and they're really kind of wringing their hands on this a little bit. But it is off a little bit between yesterday and today. It's down mildly. The dominant number is still that they're going to pause here. So after all of that talk, it seemed to have the effect of saying, or at least the grand takeaway is that the Fed won't raise rates in November. But that still leaves us with December. So right now, the current projections for December is that we will maintain that 5.25, and that's with a 52% probability. It was at 54, so they unwound that a little bit. Getting a 25 basis point rate hike has increased a little from 33 to 39, and they kind of unwound that a little, and a 50 basis point, which shouldn't even be on the table, is getting unwound a little bit. Now, to put this into perspective, that 50 basis points, it wouldn't be a 50 basis points rate hike if they first raise in November 25 basis points and then they raise in December another 25 basis points, right? So just to kind of make that clear of where this 575 comes in, it's not like they're really pricing in a 50 basis point rate hike. They're just pricing in two 225s. Out of all of this, the most dominant probability is that they don't raise. So until that changes, that's what we want to continue to keep our eye on. So today we get Bosick and we have job openings. That are the two biggest economic events on the calendar for today. If we go to FX Street, this is where we can gauge the impact of the policies that we're going to see, or the economic agenda for today. Even the JOLTS numbers are at medium compared to what we're going to get tonight from around the world. And we are going to be getting jobs data all week, by the way, just different kinds, right? Today's job openings, but throughout the whole week, we're going to continue to get jobs data. Jobs data is one of those highly important metrics to, at a glance, see how the Fed is doing. Are they accomplishing their goals and getting this crazy, super amazing economy to calm down? Hopefully you can hear the skepticism in my voice when I say that. Now, Loretta Miser is not a voting member this year, I believe. So, she can go out there chipping teeth all she wants, but she doesn't get a vote this year. They swap it out, right? They get to play hot potato on who has the right to vote. All right. So a little note of caution: when you see this much economic highlights coming out of Europe, you want to pay particular attention to the European close today at 10:30. Just a little bit of a heads up, right? If we're getting bullied or pushed around by the data coming out of Europe, a lot of that influence will end when Europe closes. And that sharp sell-off that we just had, about in the last 30 minutes, came from this direction. So, we can just casually say that this is weakness out of Europe. Europe closes, maybe the weakness stops, right? Maybe. The idea is the markets very often change direction after Europe closes. So it should be on your radar anyways on a day like this, when we're getting even more data than usual or higher impact data. Look for that to change course after Europe closes. Here's some spot gamma levels. The 1-day projected move is 0.85 again. And we've got a volatility trigger at 43.50. The call wall's at 44.50 and the put wall is at 4,200. 0 gamma 43.61, and we have a positive gamma tilt. The index is negative though, minus 1.88. We can use that positive or negative level to determine if we should be selling into weakness or buying breakouts. And it's really what, you know, the value of that is, right? Sell into weakness, buy into strength, or buy into weakness, sell into strength. Here's the market net flow, and I have this set on 5 days. It's where I generally like to keep it. And this is total net premiums. Okay, so it's not looking at one particular market, it's looking at all of the options in the market. When call premiums are positive, the green line goes up. When put premiums are positive, the red line goes up. They're both going up. There's a lot of indecision on both sides. And if you look around, we've got a really divergent market, right? Yesterday kind of stood out with those FANG names kind of holding the line while the rest of the market was selling off. But, you know, as much as we say, and we give credit to those FANG names carrying the market, it can't continue to do that over and over, day after day. It's going to need the broader breadth to help it out. All right, we're still negotiating with that weekly pivot point. We're back underneath our own daily pivot point. We're building a megaphone pattern at the moment, trapped inside of yesterday's regular trading sessions range, which will be a really good start for anything that we're going to do today. We need to get out of this zone, right? So one zone at a time. Start with the RTH. If we can get out of that, then we'll deal with the high of yesterday. And if we can get through that, then we'll deal with Friday's high level by level. If we continue to the downside and we break yesterday's low, then we'll focus on Wednesday's low, which will be the low of the week. And that's also the full ADR. Now the ES yesterday went the full ADR. The SPX didn't. It only made it to the red line, but the ES made it all the way to the yellow line and then stalled out there, kind of hovering around that zone. So today it lines up with the previous week's low. They're just right on top of each other. It's going to be a significant level, really difficult to get through, but that would be the downside target. If we do break yesterday's low, that's the goal, 42.77. Give you a little perspective of that on the weekly chart. We're focused on last week's candle. So we can just put these levels here. 43.30 is a cog line. We've got 42.77 as the previous week's low. And below that, we've got this 50-period moving average, 42.62. That would be the next level if we get through the previous week's low. That's a big if. There's no, we're not looking for that this week, right? At least not yet. Kind of dial all this in a little bit. Look at yesterday's candle. Our half back, 43.25, and yesterday's low, 42.95. So we can just start with that. We are breaking back down below the 200-day moving average. So that's kind of a big deal. You can see while we're here on the daily, just kind of zoom this in a little bit. You can see how they've really defended that 4,300 zone. Every time we've gotten through there, it's been bid back up again, right? And this isn't me hypothesizing or giving you my opinion. This is just fact, right? They bid it back up every time. We left that tail and wick behind. So there are large traders who are continuing to buy up down along these lows. At some point, one of two things are going to happen. They're going to get smart and quit buying it at 4,300 and maybe start buying it at 42.75, or they're going to finish with all of their buying and then they don't need to buy anymore and they quit buying at 4,300. Either way, at some point, they're going to quit buying at 4,300. We are building a considerable base down here, which is nice. And there is the old adage that if we, stick to a zone long enough, if we continue to not break lower or accomplish the task of, making the next leg down, that it will begin to base and head higher. They'll just get frustrated with their efforts, right? And quit trying to sell it lower. But there's also the gamma side of things. The longer we stay here, the more likely it is we start to build a lower call wall, whether they roll it down or start to build another one. We do have a great TRB setup, but we don't have any trigger at all yet. Nothing even remotely close to a trigger. The volume was sitting in the 150s. Normally, we would be looking at, kind of a muted market on pause, waiting for data. And really, that's what we had through most of the night. We weren't really doing much of anything. And then Europe threw a grenade into the whole mix. So we had a really tight draw, rated into the liquidity, and then took the break on the other side. With these pivot points or these ADR levels, they're not exactly support, but they are areas where the market tends to end its move, right? If you were to go through, say, the S&P 100 at the end of the day and look at how many markets stopped at the red line or stopped at the yellow line, I think you'd be impressed with how many stopped there and just held the line into the close, or it was the reversal point and it's where the market changed dynamics and went the other way. So we can overshoot it and chop around near that zone. Just because we go through it doesn't mean we're going to continue to go lower. But very often when we get to that red spot, we'll hang out there for a little bit, kind of digest it, and they'll make decisions about whether they're going to press their shorts, or if we were going up, whether they were going to press their longs, or if they're just done for the day. Nothing special with that ADR line, right? You can use the ATR if you're on a platform that doesn't have the ADR. The only difference between the ATR and the ADR is the difference between an SMA and an EMA when you're thinking about moving averages. An ATR is weighted, the ADR is not. So if you don't have the ADR, just use the ATR. It's the same difference. $10-day, 30-minute volume profile. We're getting a lot closer to that classic B shape. One more day, maybe two. We'll lose the rest of this volume up here. We did have that classic inverse head and shoulders. Somebody asked the other day if it had failed. Just to save you from having to ask that question again in the future, this is how you measure a head and shoulders. From the neckline break to the top of the head, you measure a 50% of the move and you measure 100% of the move. That head and shoulders did exactly what it was supposed to do and nothing more. So it didn't fail. It gave us exactly what it was supposed to give us. And then it's done. Cool, cool. Yeah, you like it. I like it. With this shallow area overhead, if we can get above 43.80, we've got a pretty smooth shot. There's not a lot up there for us interference wise to be able to continue that move. But there's a lot of trash before we can get there, especially now that we're underneath the point of control again. Yeah, there's really not a lot around yesterday's low, so we're not going to get much assistance from, old volume. We could get a drop base rally kind of set up down here, but I tend to only really focus on rally base rally, rally base drop scenarios when it has trapped traders. So, just because we've got a pivot point offers some, liquidity zones, they're not exactly equal, right? At least I don't treat them equal. We're still more than 2% below the 10-week, and we are continuing the wave to the downside. We haven't started to turn back yet. So on the weekly, we're still expanding, and we're still not oversold. So we haven't moved too far, too fast. It's not due for a bounce or anything like that. Not from the weekly anyways. When we consider it on the daily, we already had our turn and our wave back up. And as I mentioned earlier in the week, when we start this move back up, it doesn't necessarily owe us a trip all the way back to zero. There's been plenty of examples in the past where we've turned and started coming back towards zero, and then it just headed back down again. So as much as this is a really ugly wave, it can change course. Having said that, usually when it changes course, the change lasts for maybe a day or two. Say like back here, where it started to make the curve, it was coming back up, went back down for a few more days, and then made it back to zero. So we can see some of that in the history. But we're not oversold. We're not due a bounce. I wouldn't try any mean reversion plays strictly because of that. If you've got other reasons to take a reversion trade, by all means, just don't lean on that because we haven't gone that far. We don't have a market maker move this morning, which is kind of interesting. As much as this seems aggressive, they're not hedging it. That could change. I would keep my eye on this front one here, 1548. That way you don't have to trust the indicator. Just keep your eye on that. If it gets above the 1724, then we do have a market maker move. And literally while I was talking, it just shifted a little more. This 1719 was a little higher. It dropped down, and the 1545 was a little lower, and it went up. So it's just kind of, they swapped places or swapped data. There was an article that came out the other day that said the VIX has been in contango, or let's say it the way they said it. It was the longest running VIX contango that we have seen. I don't even remember what the time frame. It was a long enough time that they wrote an article on it. And the way that we deal with volatility, as crazy as this sounds, this is honestly and truly the market's perspective on volatility. When volatility is low, it has nowhere to go but up. That's totally not true, but that's how the market sees it. And when volatility is high, it has nowhere to go but down. Now, I mean, at some point, technically, sure, I guess those are true sentences, but they can do a lot before they do that. So with that longest running contango added to the when volatility is low, it has nowhere to go but up kind of scenario, they're looking for the VIX to finally start making some moves solely on the idea that it hasn't made moves in a long time. I know. Hey, don't stomp on my foot. I'm just a messenger. There's a couple of scanners that run the same thing, right? You run scanners looking at a low ADR level on the presumption of a low volatility, that you're going to find markets that are not yet making moves, but that are likely to make moves in the future because they have a low ADR right now. It's kind of the same scenario, right? So it's not an unprecedented approach. And we are seeing, the VIX is holding up a little bit better. All things considered. We got nothing this morning. China ADRs are down 1.75%. Bitcoin's down 1.5%. Bonds are down 0.75%. Everything's down. Even gold, silver, precious metals, semiconductors, financials, communications. We got nothing to the upside. Pot stocks are up 3%. But even looking at pot stocks, it's more of just a dash or a line in the sand. There's no real flows here, right? So that's more of like an algo print than anything else. So we are getting that move in Bitcoin. It's one of the sectors that are down. It's not down the most now, KWeb is, but it's close, right? So if we're looking for places to go for short trades today, the KWeb is leading the pack. That'd be things like BABA. We can see that strong gap down here. If we get below this Friday's low, we could get a nice continuation in BABA to the downside, but it's got a long ways to go just to get there. Otherwise, BABA's primed for a TRB setup to the upside. Baidu's another one, but Baidu's really not getting much print. It's just little dashes, little algo prints. PDD. Now looking at PDD on the daily chart, it already was up at this level. We had a nice little cup and handle kind of forming here. If we were going to get the handle, I would have expected it to come down a little bit more. So that's not really much of a handle. That's just a cup. And right now, as long as we're holding above that 91.30, then this move is still in play. And that's just a really nice basing pattern. Grimes would look at this as a pre-consolidation, consolidation before a breakout. And for the target on that breakout, you just measure the cup, and project it up 129 and 152 eventually, right? That's like a bigger swing trade. So this little weakness this morning, as long as it doesn't get out of control and get below that 91.30, then, PDD is still looking pretty good relative to its peers. Certainly looking better than JD and Baba. Or excuse me, Baba and Baidu. I would be watching this one, see if it can buck the trend, right? If everything else in its constituents is going down and this starts to go up, that'd be a heck of a trade. So you wanted to look in that direction. If it starts to go down with everything else, the expectation will be that it goes down less and that it holds the run, right? And JD, on the other hand, is a perfect example of just a nasty weak chart, and it's continuing to get weaker. So no turnaround. Let it test this low for a continuation. There's no basing pattern or anything at this point, right? It's just a mild pause before continuing to do what it had been doing. Couldn't even really argue about like a double bottom at this point, right? It's gone farther than a double bottom should have gone if we were just to measure this range up here. It shouldn't have gone that deep for a good double bottom. So if we do break that 28, then 26.37 before 21.18. All of that's part of the China ADRs. You could include things like the EVs, XPEV, NEO, things like that, but I tend to lump them into their own group rather than lump them into the China ADRs. Speaking of, take a look at NEO getting hit. Just about everything's getting hit, so that's not much of a surprise. Let's go ahead and bring it into a daily, get a little bit closer with these measures. So we still got this big day candle, 868. If we're looking for any kind of turnaround here, it would have to get back above that 868 first before it even, considering doing anything else. And if we kind of game this scenario out from this low, it wasn't that great of a reversal anyways, right? I mean, think about closed here, opened here, and closed here. We didn't get much. Open here and close here. Again, we didn't get much. So really, it's just one day. So from the 25th all the way to the end of last week, it was really just 2 days. The rest was just a bunch of chopping around. It doesn't inspire much for a trade. So we are getting a little bit of movement out of the pot stocks, but that's not very much out of the whole of the marketplace. So I mentioned earlier how the FANGs did good yesterday, even though the rest of the market didn't do all that hot. And that's what we're seeing here, right? All these green candles showing, that the FANGs did relatively well yesterday. They're not doing all that well this morning. But to be fair, neither is the rest of the market. So what we're going to be looking for with these FANG names is that they fall less than the rest of the market. And that if this is the turning point, that's a big if, that these are going to continue to make that grind higher. And just like at the front of the year, when the whole of the market was kind of struggling and the FANG names started to pick up and eventually brought the rest of the market with it, that'd be kind of the idea here, right? But this is early innings from that kind of perspective. And it's hard to envision that the FANGs are going to be able to pull it off and carry us into the end of the year on their own. They've already made such a fantastic move this year, and consider how much they're still up on the year. Take Apple for an example. Year to date, it's still up 22%. Microsoft is still up more than 33.5%. Google 36. Amazon 11.75. So, I mean, they're already up a lot. They can carry the market, but it's what's more likely. What I've been kind of looking at here is if they do start to do what they did earlier in the year and bring that swell of the market with it, they can start to fade off or maybe quit climbing and let the rest of the market do all the work, kind of priming the pump. So we'll see. Still looking for performance chasing and that market backdrop to get brought together. So all eyes are on the FANGs at this point, especially with that tell yesterday. New quarter, new month, new week. And what do we see right out the gate first day? All the FANGs getting bid up on a day when the indexes were getting bid down. Okay. We'll see how it goes from there. NVIDIA is up this morning, by the way. Let's take a look at that one since it's still going against the trend. So we can see NVIDIA is holding the line here. It's up just a little bit better than where it closed. It closed at 447.82. It's at 448.62 or 82, depending on the bid or the ask. So if we're looking for a continuation here, kind of just map out yesterday's levels. Let's start with that. Really needs to hold that 445. It would be a nice setup if we can come down and bounce on the close and then come up and rally out. If we get a topside breakout, we can aim for 458.32. It's got a market maker move of $5.33 and an average daily range of 13.50. So we take 13, add 5, that gives us 18.50, 18.80 for the move today. And it could easily do that, right? We're not talking about NVIDIA making extra big moves. We're just talking about a normal measured move. For a big move, we could take that 18.50 and double it. That would be considered a big move. So you're looking at 465 today. If it made all of the ADR and the market maker move, which puts us at 200%, it's actually at 100% of the yesterday's measured move. I don't think it's going to do that, by the way. I'm just saying that's the measurements. It could do that, and it wouldn't be considered outsized at all. Every market's got a measured move, right? The fact that it's even up this morning at all says a lot about the possibility of it continuing to go up this morning. It's the only one, too. None of these others are up in the fangs. All right, so we still have the dollar holding up above that 107 zone. It's untenable, right? The idea that it's going to maintain this and that we would see any kind of a rally in the S&P is just hard to fathom at this point, right? Now, yesterday, it looked like we were getting a really nice setup. We had the dollar hitting against resistance, and we were looking for that to get whacked back down. But the 10-year went through resistance and kept pushing to the upside. So, you know, if they had both worked together and took that rejection earlier in the day, we could have had an entirely different day yesterday. But the 10-year managed to break out and keep going. And even though the dollar really didn't follow up with it, it killed any sort of chance we had back here of that continuation, right? So, I mean, they sure gave it one heck of a shot. So we're looking for that sort of sync, right? That synchronization between these, where you got the dollar at resistance, the 10-year at resistance, say a US dollar China or a US dollar Japan at resistance, and then these three start to fall with the S&P and the NASDAQ coming off of a support level. That's kind of what we're looking for. But it all unraveled yesterday. We never got that kind of a setup. This morning, we got the 10-year advancing again. It's not holding its zone. It's not holding its range. It's just marching to the upside alone, by the way. The dollar's not going with it yet. So watch for the dollar to break out and join this 10-year on that move up and see if we start getting at it, anything out of China or Japan. US dollar Japan here, still marching to the upside. It's still bid. And US dollar China, or excuse me, US dollar Japan, since 3 o'clock, it's just been marching 5 hours to the upside, right? So a little bit of basing here. If we can see this break structure, maybe get below that 149.93 and get back at least below 149.85, that'd be a good start. But if this proves to be support on this cup here, and that holds, and we continue to see this move up and the 10-year move up, we get a dollar breakout, we could see ES, you know, down at 4,200, 4,225 in today. No problem. And we still got this threat going on with the bonds now down below that 112 zone. We're at 111.5. So it's kind of getting out of control there too. Yeah, that's just that's just out of control. So this is where the focus is at today, right? Bonds, yields, currencies, and the news. Because if we're going to see anything, it's going to come out of those three areas. We do have additional auctions today also at 11 and 11:30. So by the afternoon, you 0-day traders should be good to go for your 0-day play, the afternoon 0-day play. All right, ALXO is getting a little pop. It's one of those gapper plays. And RDHL, but that one looks pretty nasty. Looks like they've got Centers for Medicare and Medicaid Services published the price for the companies, blah, blah. Yeah, it's just event spike. I think ALXO looks about as good as it's going to get this morning. At least for those gapper plays, right? That's what I got for you guys this morning. Be careful, be safe. I will see you all tomorrow.